So on Wednesday, Coinbase's share price recovered from 322 to 341, is now only down 5% off of Tuesday's peak drop. It represents a $72 billion market cap for the company, which is extraordinary. In Q3, Coinbase saw large quarter-over-quarter drops in major categories like revenue, users, and profits. Not dissimilar to Robinhood's story, but in their year-over-year numbers, they were still up huge. So if you remember Robinhood's earnings on episode 1313 2 weeks ago, revenue is down 35% quarter-over-quarter, but up 35% year-over-year. What that means, what that says to me is there was just we had a big quarter, people with stimmy checks, crypto booms, everybody in a mania to buy tulips or the next, giant wave of consumer and technology innovation. Time will tell. Transaction-based revenues will swing wildly depending on market conditions. That's the truth about these things. If things get really popular and there is a mania, whether it is, AMC stock and stonks or Dogecoin or Bitcoin or NFTs, things can go crazy. Although I don't know if Coinbase is actually trading in NFTs yet. So let's just get into the earnings real quick. Total revenue, $1.3 billion. That's up 4 times year over year. 4x year over year. That is extraordinary. We've been talking about high growth companies being 20, 30, 40, 50% growth. 4x. 400% growth. It's down 40% quarter over quarter. There's going to be bumps in the road in these high growth companies. So I think that's to be expected. Transaction revenue, $1 billion. That's 83% of the total revenue. Again, that's up 4x year over year, down 45% quarter over quarter. Subscription revenue and services revenue, $145 million. That's about 11%. This is mostly made up of blockchain rewards from people staking Ethereum, and custodial fees of $31.5 million. That's where they get paid to hold on to your crypto and make sure it doesn't get stolen. Subscription revenue grew from $600K in 2020 to $8.6 million in 2021. Those are small numbers compared to the transaction fees, the custodial fees, etc. However, it's 12x, right? 13x. Like that's a big multiple. And so I do think that Robinhood and Coinbase and all these financial services companies are going to have great subscription revenue. If people will pay for Calm and Netflix and Spotify and Steezy to learn how to dance, to learn how to, get to bed easier, they're going to pay for financial subscriptions. It's still worth it, right? And so I'm paying for Twitter now. I did Twitter Blue for $2.99 a month. Other revenue, $77 million. They don't specify what this is. I'm thinking those are services revenues when they do big block transactions, i.e., if somebody wants to buy $1 billion in Bitcoin, maybe that's what it is. Last week, crypto news outlet The Block reported Coinbase was testing a new subscription service called Coinbase One. Benefits would reportedly include no fee trading, which would put them head to head with Robinhood, which is going head to head with them in crypto now, and prioritize phone support on holidays and weekends. No word on the cost of the subscription yet. I think $5, $10 a month is a no-brainer. I would like to see these companies even go $15, $20 per month and have something really great for people. Coinbase is trying to diversify away from transaction-based revenue, according to sources. Robinhood offers something similar with Robinhood Gold. That's $5 a month, and that lets you have bigger instant deposits, professional research from Morningstar, level 2 market data from NASDAQ, access to margin investing, all kinds of premium stuff. And when you have those kind of programs, it basically lets you segment who are your best customers. It's kind of the Amazon Prime of this service. You also see that with iCloud. I now pay for some iCloud. I pay like $30 or $40 a month for an iCloud bundled subscription, which gives me arcade news, 2 or 4 terabytes for my family. So now all 3 of my daughters, when they come to me for a game, I say, go to the arcade tab. You can have any game in arcade. You cannot have the other games because they have all kinds of upselling and garbage in them that I hate. Thank you. Shout out Tim Cook for making a nice, clean arcade where I can have my kids and trust that the games are not trying to manipulate them so much. And then the news product is pretty good too on Apple News. Shout out to Apple News because now I don't have to have a Wall Street Journal subscription. I can just see some stuff there. Okay, back to Coinbase. Monthly transacting users, 7.4 million. Again, up massively 3.5x year over year, but down quarter over quarter. That's a good number to look at, because you do have a lot of holders. You have people who created accounts, maybe bought 1 Bitcoin or a tenth of a Bitcoin. Robinhood has 17 million monthly users. So you're seeing the difference between the crypto and the trading of stocks. I think the crypto people, they may buy every couple of months, but they're holding it. They're not selling their Bitcoin. That's the whole point, is to hold it forever. And so I think that's a great opportunity for Robinhood to add users, and then adding stocks is something that Coinbase could do. If people are trading stocks, they could get more trading going on. Net income $406 million, up 5x year over year. Pretty efficient company. Down 75% quarter over quarter. For these companies, I really don't care about their profits. I care about their growth and the number of customers they have. I would rather see them not have profits at this point and see growth. Public markets might feel differently. In related news, Bitcoin and Ethereum are now at all-time highs. Bitcoin, $68,000. Ethereum, almost $5,000. Coinbase went public via direct listing in April at $381 a share, popped up to $421. They hit $100 billion. In July, the stock bottomed out at almost half, $221. So this has been a lot of swings. We saw that also with Uber, which I think during the pandemic went down to $15, $16 a share, up to $60, now at $45 with price targets of $70. Like these stocks, when they first come out, I think Wall Street has to understand the business and look for consistency, look for profits. And so that represents an opportunity. It also represents the danger of some of these companies because, some retail investors might not know the difference between Nikola and Tesla, even though they are the first and last names of a famous scientist. They're two radically different companies. And so people have to, the markets, I think retail investors have to learn the difference between them. They're getting pretty savvy, I think, and they have to understand what exactly they're buying and what the risks are. You're going to see a lot of speculative stuff come out. VTOLs, electric trucks, anything that's a theme, quantum computing, space travel. All of these things are highly speculative, synthetic biology. When these things SPAC and go out early, pre-revenue or modest revenue, customer traction, be careful. You're making a venture style investing. And if the stock goes parabolic and goes nuts and the company doesn't have customers yet, man, just pump the brakes and, you can wait to buy it is my best advice. I don't want to give stock buying advice, but if my mom or my brother are asking me and they said, hey, do I need to buy this stock? I was like, it's got the same price as another company with real revenue, like Coinbase and Robinhood have real customers and revenue, and Nikola and maybe this VTOL company, maybe they don't have customers or revenue yet. Maybe put 80% into the company with the customers and 20% into the speculative one. There's some reasonable betting strategy here, and it is gambling. When you are investing in pre-product market fit companies, you are gambling. Coinbase and Robinhood are not that. These are millions of customers loving and using these. So what I'll say about this pair of companies, I obviously have an interest in one and not the other, but I have accounts on both, is they're incredibly well-run companies. They have an incredibly large user base already and passionate users who are not going anywhere in my estimation. So I am a huge fan of both Coinbase and Robinhood. Also, if you look at Coinbase and Robinhood, the founders are still running the companies, and that's always a great sign. And they're constantly, if you look at the product velocity, releasing new products. So Robinhood with their crypto wallet and NFTs are coming to Coinbase, according to some announcements. So product velocity is really, really powerful in a company led by a founder. You see that with Elon. You saw it with Travis. Just constantly releasing new products. You saw it with Steve Jobs. There's this obsession with new, groundbreaking investments in new products. And so congratulations to the Coinbase team. Okay, next up is our 10 items for our startup checklist. We're going to go over markets and branding. Stick with us.